Let's now be joined by Susan Lee from Fox Business, who is kind enough to join us this morning. Susan, how are
You
you?
guys share passwords? I
Uh,
didn't know that. I would not do that.
if you'd like my Netflix password, I'm happy to send it to you right after this, but only
Okay.
for the next few
Wow.
months. So
All right.
it's
Yes, that's and then you have to pay what, $7.99 I think for two members that don't live inside your house
that's what's expected,
per
and I'll,
month.
I'll tell you. So my parents are actually mooching off of me. They use my Netflix, and I don't know if I'm going to allow them to do so if I have to pay an extra $8 a month for them. So we'll see how that
Wow.
negotiation goes. It'll
That's
be
cold.
it'll be challenging. You know, they're highly relied on as babysitters for me right now, so they might win out on this one.
It's the opposite for me, and whenever I tell my colleagues like Neil Cavuto that he always says, "Oh, you millennials, when are you going to stop mooching off your parents and start paying for yourself?"
I'm trying to do the reverse mooch to help pay them back for a little bit of college, but it's neither here nor there. Susan, let's
Okay.
talk a little bit about this market here this year because it's been a really strong start to the year
Yep.
and it's got a lot of people excited, and all that I can think of when I see the stuff that dumped last year roaring to start this year is that's not usually how new long-term bull markets actually start. Is that the wrong way to look at it?
Well, here's the thing: is that always so when the S&P falls 20% or more, 3 out of 4 years since going back to the 1950s, you've
Mm-hmm.
had stock markets bounce back the year afterwards, and it's always the ones that get punished, the ones that have sold off the most, that usually comes back the most. It's kind of what we call Newton's law, where it's you have to what for every action there's an equal and opposite reaction.
Sure.
And so that's kind of what we're seeing right now is just money being, I think there was money on the sidelines after the sell-off of, the horrible sell-off we saw last year. And so now you're getting indications that maybe we're towards the end of this rate hiking cycle by the Federal Reserve. Although you did hear Powell say that he's going to continue to raise interest rates this year, but not by as much as that 4% that we saw, that spike in borrowing costs that we saw within 10 months or so. So I think that's kind of what investors in Wall Street are enthused by.
What do you make of the fact that ultimately this is, even with the recovery that we've seen now in the last, 2 or 3 months, this is a
Yeah.
market that is trading at the same place that it was back in early August of last year. So 6 months without any, decisive movement, just kind of whipsawing from one extreme to another. What's it going to take to either see a breakout to the upside or to see us, fall further than we did in October?
So markets are certainly not cheap if you're trading at 22 times earnings right now, which is how
Sure.
we kind of price markets and stocks, and that's the average on the S&P 500. But I wouldn't paint the stock markets with one brush either, because if you bought into, say, the high tech, high growth, no profit type of names, you're down 80% over the past year. I mean, Tesla was down to 103 levels at the bottom in December. I was actually tempted myself, but now it's bounced back almost 100%, closer to
Yeah.
$200. So it really depends on what stock you held and what kind of losses that you're nursing. Some who've lost 100% last year, they would say, look, I still need a lot to catch up until, what I made over, 2022 and 2021.
The jobs report last Friday was a hot one, and obviously the first one of any year, tends to be fairly volatile just because new data set, revisions to methodology, and things like that. But how much importance does that place on the January CPI that comes out I think it's next Tuesday, in terms of, hey, previously it seemed like this market had, really believed, okay, we'll trust Powell, and, we think inflation may be on, the downswing here, but are there any renewed concerns about inflation starting to brew again that people are focusing on now?
Well, if you look at the jobs report, I think the underlying highlight was the fact that wage gains came down. It's slowing to 4.4%, right? And that's so you're still making less than the rate of inflation, which is still at 6.5%. But that's kind of the key to inflation there. Although I would say if you look at Manhattan rents, did you read that headline where Manhattan rents hit a new record high? It's tough for people looking for an apartment here, but also you have rents and shelter being a big component of that CPI inflation report. But one thing I will note is that I think we have passed peak inflation, especially when you hear the Federal Reserve Chairman himself, Jay Powell, over and over again, not just during the Fed meeting a few weeks ago, but this week, talking about disinflation I think that says that even the Federal Reserve and Central Bank thinks that we're past the peak part of price hikes.
Fantastic. Susan, anything else that you want to add in terms of things that you've been seeing over the last 4 to 6 weeks here?
You want to talk about Bob Iger? I'm obsessed with this Disney story.
Yeah, what do you got?
Because the stock is up 4.5%. It was up almost 8.5%, closer to 9 yesterday. And after hours after that report card, I didn't think it was a great report card, guys. I mean, they lost 2.4 million subscribers for Disney Plus. That's the first loss in subscribers since it launched in 2020. And I think, okay, sure they beat on earnings and sales, and parks were bad. They're cutting 7,000 jobs, reducing costs by $5.5 billion. And also Nelson Peltz just said he's ending his proxy fight. But I think Iger's got this reality distortion effect that Steve Jobs had to make you see the good parts and not look at the bad things. And that's kind of what he has, because Wall Street's saying, okay, well, we're going to give you the benefit of the doubt. And I think if it was anybody else but Bob Iger giving those type of losses for streaming, I think that stock would be down.
What do you make of the fact that since it opened this morning, it's gone from up almost 6%, now it's up less than 2%?
Yeah, so it's 114 right now. So, yeah, look, you've made money since the start of this year and since Iger returned. You're up, I think, 24% or so. But the fact that you're losing subscribers, 2.4 million is a big number. And they're blaming that's mostly India with the loss of the Indian Premier League, Cricket League, and those rights that they have there. So these aren't high-paying type of customers. But, Netflix lost, how 60 billion or so? Or was it at 60% in market cap after they lost 2 million subs to start last year?
Yep.
So I just feel like it's a different effect depending on which year we're looking at and who's in charge.
Very good. Susan, appreciate you joining us today. Thank you so much for the time.
No, thank you for letting me be a nerd, as always.